Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Well, hello and welcome to another episode of the ASB Investment Podcast, the show where we dig into smart strategies for growing your money wherever and however that is currently planted. I'm your host, as always, Nigel Grant. And today's episode is about a question that comes up quite regularly. It's a hard one to answer, as there's always a lot of quote-unquote, it depends in situations like this. That point is, should I invest or pay down my debt, which usually means mortgage, especially when interest rates are falling? So should you push an extra bit into your mortgage, put more, or even start investing into KiwiSaver, or potentially branch out into other investments? And to help with this, I'm joined by fan favourite, returning champion to the show, Ngaire Angus, our Head of Wealth Advisory. Welcome back, Ngaire. How are you?
I'm so well. Thank you so much, Nigel.
That was incredibly positive.
That was, indeed. Gosh, I feel like a box of fluffy ducks after that introduction.
And I wanted to ask you on this occasion, avid listeners might know about your proficiency in netball umpiring, but the season's finished. How did the season go on the whistle? Is that what you call it?
Well, I've never really heard it sort of described as on the whistle, but I like it.
Well, that's it
I
now.
like it. It's appropriate.
Okay, all right.
So, what a great question. I have found a new love in my life, and that is umpiring, and that's a bit strange. Lots of people don't like umpiring. If anybody who's sort of in the netball circles knows that as a player coming through the ranks and whatnot, you generally are forced to umpire when you get to a certain age, and it can be a bit scary.
So outside of your games, you're forced to do some umpiring?
Yes, that's right. Yeah, because actually you can't function without a pool of umpires. Like, the games aren't being played. Yeah, it's such a critical part of sport, just actually having a volunteer army and volunteer community that really keep, obviously, the wheels turning. So, funnily enough, I used to play netball years and years ago. It was a real passion of mine when I was younger, and I was pretty serious about it.
Yes.
But then,
you can say good at it.
So, anywho, life continued. I probably stopped playing netball sort of in my mid-20s when I lived overseas for a few years. So I never really picked it back up again. And I think it had been such a big part of my life for so long that I kind of just had a clean break. However, as I've gotten older, I've coached a lot, coached my two daughters' netball teams right through their sort of younger years. And then I was just being lippy on the sideline.
Great.
One day.
Great role modelling.
And my husband's giving me the elbows, so the best thing he could do is shove a whistle on my gob. And then, lo and behold, he's got rid of me and I'm no longer embarrassing the kids. And turns out that I actually really enjoy it. And I just have as a former player, and you have a real appreciation. I still play actually, I play socially, but
for what it takes.
Just for the impact that you can have, good quality umpiring really can set the tone for the quality of the game. So that's what I'm really passionate about. And
I can tell.
Yeah, so I've done a few qualifications. I've got my NZ theory just sort of mid-year, and now it's into getting the signed off so that I can then become a New Zealand umpire, which is, that requires some extra fitness. So, I'm all about the yo-yo.
Oh, yo-yo test, speed test and stuff.
Yep,
do you still say penalty pass or the shot?
Absolutely.
Yeah, I remember watching.
Well done.
Watching Silver Ferns tests over
the
years.
I've got it in my head that actually we need to have a wealth and maybe a competition against one of the other divisions. Within ASB. Let's make it happen.
Okay, I think I'm busy that day.
You know the lingo, so you're in the team.
Okay.
Well done.
Okay.
Well, you can be the captain.
Thanks for the heads up. It's good that this was revealed to me during a podcast record, so thank you.
You heard it here, folks.
We'll circle back on that. So let's go to the topic that we're here to talk about instead of my budding netball career. Thank you. I guess we've seen mortgage rates ease after a couple of years, from kind of, steep increases and stuff. But for many people, that means, they've suddenly probably got a little bit more money each pay or however you term it, freed up. But that age-old question might come up in terms of, whether do I keep, paying down debt? Do I do something else with my money? I guess any initial kind of holistic thoughts or overall thoughts you have before we get into consider some of the specific details?
I hate to state the obvious, But I think it's a really great opportunity when there are moments like this where if you're coming off a fixed rate that's been quite high and if there's a material difference in interest rates, this is a great opportunity to reassess where you're at financially and to actually take a much broader look at what you want to achieve. So there's something in the planning and setting goals and having a system in place that I think is really critical to your kind of long-term financial well-being. So for me, the obvious thing is to sit down and depending on who you own your property with, really make some decisions around, is it paying off the mortgage faster? Is it starting to build that nest egg, as you said? Is it a combination of two? Or have you actually just been struggling to make ends meet and now you've got a little bit of breathing space? So it could be a number of situations and circumstances impacting different clients. So really take stock of your own position.
So let's start with a familiar route, I guess, putting more, some people will say, you should do all of one avenue. Others will say you might do it, the other. The third party might go, we'll do a bit of both. But, one of the common ones is always putting a little bit more towards your mortgage or other debts. I guess, what's some of the appeal to doing that when you've had some money freed up?
I think the immediate appeal is that it's very simple and you know exactly kind of the impact that you're going to have if you are repaying more debts or more of the principal. Because every dollar that you are adding to the principal balance of your loan, that's saving you interest in the long term. It's effectively a risk-free return.
I like the sound of that.
Yeah, that's right. So, you're reducing your debt, you're building the equity in your home, hopefully, if markets stay relative, property market stays stable or improves. So, all of that can improve your financial security, your financial footings, and that makes you feel like you're getting ahead. And I would just say, just to emphasise that point, the sort of interest costs over time can be significant. So there would always be a sort of push towards trying to reduce debt as quickly as you possibly can. However, I think there are some things that you need to have a look at. So some people actually really don't feel comfortable having debt. So there's a mental and emotional kind of element to it.
They can't see past that, and they're allowed to not see past that, so they can focus there.
That's right. Yeah. And, they feel like the bank's got them in a tight hold, or all those sorts of things. So, if that's the case, then it may well be that for your emotional well-being that you do really just go hard on reducing the debt.
Yeah.
And there's obviously a really strong financial payoff for that. But if your interest rates actually are pretty low on that home loan, then there could be an argument to be looking at, other opportunities, and particularly things like KiwiSaver. So that taking that really long-term view, and particularly if you have got, sort of 20, 30, 40 years in terms of a time horizon for investments, when you look at some of the returns that you're achieving in those sort of growth and aggressive funds, that's really quite compelling.
Before we get too much into that, I just want to go to a point you just said about that risk-free kind of return, or sort of, I guess in quote-unquote risk-free return. But, as interest rates fall, that return on the amount that return, and I'm doing the kind of the rabbit ears thing around that, on the amount that you save might not be as high as it once was. Like if your mortgage rate was at 7 before and now it's at 5 or in the 4s, that return isn't as much now, right? So that's kind of, is that where
that's right. Yeah. So you're getting a bit of a squeeze on there. So, that's a 2% return, whereas that's right, if you're looking to invest those funds elsewhere, you could be achieving potentially a much higher return.
A hurdle for a potential investment opportunity, it's delivering better than what we're getting paying off a 7% mortgage versus a 5 or 4% is a lot higher, right? That hurdle for what an investment has to produce to pay off this, to beat the 7-1 is a lot. I guess you've got to reach for investment opportunities, whereas something to beat 4 or 5% might not be as arduous, correct?
Exactly.
Yeah.
Yeah, I think so. Particularly in those sort of longer term strategies. Yeah.
And so if someone is of that mindset where and again, this is a show that's anchored on investing and stuff, but we like to cover off topics that are kind of across the spectrum of savers and wherever your mindset is at. So it's okay to be fixated on, I want my debt to be zero. That's okay. You don't have to be someone who's got a big diversified pool of assets and things like that. So if you are that way, or you're temporarily wired that way because of what you've just gone through, and that really made an impact on your, financial well-being and your family's budget. There's some pretty cool ways you can look off to see how much you can bring back that curve, right, or when your mortgage might be paid off. So I guess I use some of the tools that ASB's got for my own home lending, but, they're all designed to help you see what impact things will make, right?
Yeah, and sometimes that's really helpful to have that sort of visual representation of, the time frame of your home loan, the credit costs over time. Most of the tools that we've got in our Home Central, you are able to just use a slider and you can kind of adjust repayments and see, the impact on the total credit cost. So that's very, very helpful. And that means that you can make some really good informed decisions and work out, for example, we've got the KiwiSaver changes coming into effect on the 1st of April next year.
Yes.
So we'll default to 3.5% contribution. So if you're currently contributing 3%, then that's going to increase. So you can start to really sort of work around, like, what does that mean for you? Is that affordable? If it is, great. If you are saving some money because you've come off a pretty high fixed rate, that could be a way of, as you mentioned, sort of diversifying.
Yes.
So that you have got, you've got your property, you've got some of those managed funds and long-term investments.
Or if you stopped your KiwiSaver during the period we've just gone to help make ends meet, you can look to see about restarting that. So you did a great job segueing there, better than I could have done. But, to that investing side, whether it's restarting, increasing KiwiSaver contributions, or even building out, one or two new things, I guess what's the key call out or things you'd advise for people to do there if they're wanting to look at that? Is it as simple as talking to someone or starting out looking at some of the tools that are online?
I think whatever works for you, to be honest. So yeah, you can have those conversations in person, over the phone. You can do a lot of research online. We've got a investment hub at ASB, so jump onto our website and just get really curious about, what do those options look like. So some of the things that come to my mind immediately is that, if you do have some money freeing up that you can put to work elsewhere, is simple and easy KiwiSaver. Obviously, for the reason that actually you've got, there's a trigger point anyway next year. So just make sure that that's affordable for you and you're kind of adding that into your budget. I think also, looking at other funds, because of course KiwiSaver is going to be locked away to your age 65.
Yes.
Okay, so if you are looking for other investment options, there are a range of things that you can start to, even, small amounts right now still compound over time, working out using the calculators that are available to you. For example, like asb.co.nz again, we've got calculators in our app, we've got calculators in the website that will enable you to kind of say, well, what does me contributing $200 a week look like? Or, fortnightly amounts or lump sum amounts, and then kind of work out what your sort of risk profile might be. And you get a really good sense of what that money's going to do for you over time. And
before we sort of delve a little bit deeper into kind of those investment opportunities outside of KiwiSaver, because I know your team helps, with sort of those seeking full financial advice. But one of the things I've always liked about KiwiSaver is that also let's back up a little bit. A lot of people have said to me as well that when they've gotten to their first home or a home, they've liked it because it's almost forced saving. Even though you are paying interest and you're paying principal, it's a wonderful way, like, I have to make this payment, and I'll fit my budget around it. KiwiSaver, I see, is very similar. So if you are comfortable with the mortgage going out every fortnight, the nature of KiwiSaver being locked away, you can't get at it, is probably a really good kind of next step, maybe.
Yeah, I think that's one of the huge benefits of KiwiSaver is that it's gone before you can see it, before you can touch it.
Yeah.
And as much as we as human beings want to be able to grab at things, actually it's a protection against our own kind of, just ill-discipline, to be honest, because I think if you can access cash, unless you are super disciplined, there's always going to be things that crop up. Always going to be financial emergencies. And that's why we obviously encourage our clients to have emergency funds. So you don't need to be dipping into some of your long-term savings. It's probably the reason why, owning a property is such a strong stabiliser, one for families, but also, over time you can re-borrow. You can top up if you do have, the car breaks down or, you broke a tooth on your nectarine. I did that once.
On the stone, I assume.
Yes.
Okay.
So that wasn't...
Nectarine's my favourite fruit.
That wasn't fun, I have to say. I bet you there's a couple of my friends laughing about this. I think it happened at the beach. Not ideal. Okay. Anywho, so sometimes, like, all of this is really costly, and sometimes you just don't have the money to be able to, cover all those unexpected items. So, yeah, that's the beauty of having a property that you can reborrow against. I'm not saying that that's what you always want to be doing. Ideally, you've got your emergency funds, but you do want it, if you've got KiwiSaver tucked away for the long term, ideally that's for your retirement savings.
Yes.
We've talked previously about the importance of being able to pay yourself in retirement.
Yes. Yeah.
That being your income. So, really, really important. So you really don't want to be touching that. So if you've got other diversified investment funds or managed portfolios, that are still liquid assets, but, they've got a purpose, I think that's quite good in terms of having a more sort of well-rounded plan.
Just full disclosure, Ngaire and her team work with customers who probably, have got a little bit more to invest as such than the average New Zealander. So with that out of the way, but I guess the same principles probably apply, right? So your debt and getting that, paying that off at a comfortable rate that matches your mindset and however you view it. Rainy day fund.
Yeah.
That's still something you advise even to potentially people who have got more than the average person?
Oh, yes. That applies no matter what. I mean, nobody's immune from the
nectarine shattering event.
Correct.
With that scene set in mind in terms of the typical client that your team is working with, some of the principles still stay the same across all clients. But what have you seen in your time with this particular client set? Are they hammering debt first and then thinking about investing, or is it more kind of like a little bit of everything at the same time? Or are you noticing any trend changes, in terms of what clients are kind of the approach they're taking to this conundrum?
So the first thing that comes to mind is that I think there has been a shift, and we're experiencing a shift now where historically repayment of debt has been kind of the priority for our clients.
Get the mortgage paid off.
Get the mortgage done and dusted. And then what has tended to happen is that we sort of get that mortgage paid off at a certain age. And then what tends to happen at that certain age is that people start to inherit money as well. Or they start to, sort of sell assets and start to consolidate.
Right.
And then they have money to invest. So it's definitely been kind of a two chapters, in the book of, first is buy the house, really traditional pathway, buy the house, pay off the debt, then look at investing in other asset classes.
And is that is that traditionally been a really hard transition?
I think it's been actually a subtle shift, to be honest. I think what's tended to happen now is we've got more access to information and people have been becoming more confident in their sort of financial prowess. I don't know if it's the right sort of terminology, but as people become more aware that there's other pathways to both wealth creation and also wealth protection, if you like, and preservation, is getting much more comfortable with managed funds and sort of, like I say, the diversified assets. And what I'm seeing now is that people are wanting to get into the markets much sooner, so before they've paid off their home, or like well before they've even bought a property. So I'm seeing a shift in the sort of younger generation being far more confident in their investment decisions and or just having more confidence.
Curiosity, maybe as well.
And being curious, that's right. And really, I think the access to information has been just a real enabler and a democratisation tool, if you like.
And so that positioning would lend itself to that maybe it is more common now to be doing a bit of everything at the same time or earlier, right?
Yes.
As opposed to that sort of just linear goal that's one, done, goal two, right?
Yeah. And I don't know that there's one right way. I think, again, it really depends on your own situation. There's many people who have never had a financial hand up or hand out. And so, are just really kind of toiling away and trying their best to do what fits them and just really slogging it out. And then there's others who might be in a really fortunate position where they were given funds and rather than just going straight to, I'm buying a house, they're starting to think about, actually, if I do work out the calculations, what's going to work for me in the long run? There's a lot of extra costs involved in owning a property these days, and particularly if you're not owning to live in the property.
Yeah, if you're,
so I think if you're
to rent out.
Yeah, so there's a significant shift in the costs to be a professional property investor, and so that I think can be quite off-putting, particularly if you're no longer really willing to be doing the work yourself. And that comes, if you've got other interests and you want to be utilising your funds in a different way. So, and your time. Time is so precious. Even at my age, it feels like the years are just flying by.
It's because you're doing so much umpiring.
Maybe it's that. I think, time is that really scarce commodity that it's so simple and easy to invest and to have access to so many amazing companies and options that are, globally successful. I think that's just a much easier, simpler option these days.
So we talked about both sides of this critical question, which is, the one side is paying off the debt. Some people want to accelerate that and, kind of think that's a key thing to do. Other side of it is to, just to consider what other options are out there or not. And that's, we've got a whole myriad of podcasts that are sort of designed to help you start that adventure as such. But, what are some of the common traps people fall into around this question? The one that stands out for me is that, rates don't stand still, interest rates. So don't set your plan solely on where things are today. Sometimes it's good to accelerate paying off, but other times it might be good to diversify. So, do you agree that potentially having a number of horses in the race might be a good way to approach it?
I do, and I think there needs to be a degree of flexibility in your mindset. So understanding that principle actually is really critical, that interest rates will rise, interest rates will fall.
Yeah.
And you do need to be able to adjust. You need some margin in there so that you don't fall over when things get really tough. I think it's this concept of thinking about the future. What does your future self need? And being very kind and caring and considerate about your future self, because it means you're going to have to try and not to spend all of that extra money that you might be enjoying right now. So yes, absolutely spoil yourself sometimes, but make sure that you have some flexibility in your finances so that you can move quickly if needs be.
If need be.
You don't really want to get yourself into financial strife. I mean, that's just stress.
Yeah.
That none of us need.
And it's one of the key things, I guess, not everyone will do comprehensive financial planning, but, having a plan is critical to kind of navigate wherever you are. Is
Absolutely.
that fair?
It is. And just taking a moment to think about what is the objective of your spending plan or your income, where can it stretch to? I still go back to what is the lifestyle that you want in the future?
Yeah.
And are you setting yourself up to achieve that lifestyle? Because I think that can really help to drive the decisions that you make today.
Yep.
And it could be as simple as writing it down. There's something very powerful about writing down your goals or writing down your future aspirations and getting really just cementing that so that you have a little bit of stickability and discipline. Like when you see something else that, it's the next shiny thing that could, could derail you, that you've got something to anchor to. So, it's about having a degree of flexibility, making sure that you're taking stock of, what's your position now? What do you want it to be in the future? Have you got, are you on the right track for that? Whether that is having a multi-pronged approach, like you said, paying off debt, saving for the long term, and maybe saving for the medium term as well.
And if you were to summarise it, I guess when rates move, I wouldn't say fall, but when rates move, where we are now, potentially homeowners are seeing probably a bit of, hopefully a bit more room in their day-to-day budget. What's the best mindset, I guess, to have? Is there, do you see it presenting an opportunity to do anything in particular?
Oh, look, I think of it as an opportunity to invest in your future self. So I think the mindset is that this is all an opportunity to be thinking about, what does the future hold for you? Where do you want to be in whatever time frame? And are you on course to get there?
So that could mean saving, but it also could mean going back to school. Or is there an opportunity to, maybe get to some of the things potentially that you have had to put to the side during this period we've just gone through? So that could be, we talk about this all the time. It's not just the maybe financial future self, but it's also health.
Yes.
Social relationship. Maybe if there's things you've neglected or had to relegate during the last couple of years, that's why we work hard.
Yeah, what's it all for? I've immediately thought of like the wheel of life. So,
board game?
Well, it's not a board game. It's sort of an activity you can do, and just to have a look at the balance that you've got in your life, if there is some. And it's all going to be a bit skew as we move through life in different phases and stages. It's all so intertwined. So, your money is one really critical element that does give you freedom. It gives you choices. And so, you do want to try and look after it. And to your point, though, some of the things about having a plan and having a structure and a system is that enables you to sort of free up time. Once you've got that set, free up time to then be doing all those other wonderful things like hanging out with your loved ones and working on your fitness and your health and indulging your hobbies and passions, whatever it is that sort of makes you really enjoy life. I think that's what the unlock is.
Yeah, if you've been neglecting date night, maybe reinstate that. That's very important.
Is that a note to self?
Oh, no, not at all. Not at all. Date night is, I think it's a regular thing. I'll have to take that back and I'll take that back to the CEO and just ask and see if I'm overestimating things. Ngaire, thanks so much for joining us to talk about this one, because I know it's a key question that a lot of us ask ourselves potentially, not to mention ones we receive from customers as such. To our final question now, one that we ask to all of our guests and one that you've always brought good answers to. Is there anything you've been reading, listening to or watching, again, that you can recommend to our listeners?
Well, I've just started Brené Brown's latest book, and it's got quite a long title. So it's called Strong Ground, The Lessons of Daring Leadership, The Tenacity of Paradox, and the Wisdom of the Human Spirit.
Is that all just the title?
That is what I believe is the title.
Wow, okay.
I love Brené Brown. I'm a big fan. So I saw this in the warehouse. I was actually looking for the Gilbert Enoka book, I think, and I spoke about that last time, but I ended up listening to that on an audiobook. However, I have got the physical copy of Brené's book. I just sort of read the first chapter sneakily while I was browsing the aisles. And she was on about the pickleball, because she's an avid pickleball player. Okay,
so miniature tennis.
Is that like paddle tennis? Is that the old school paddle tennis?
I don't know. There's paddle ball, there's pickleball, there's table tennis. I can't follow it all.
Well, when I was young at school, we used to play paddle tennis. And maybe this is what pickleball has evolved from. Who knows? Anyway, I just really liked it sort of pulled me in, because she was talking about an injury that she suffered. And then kind of the working through the injury with her physiotherapist and her sports therapist. And essentially, he's basically telling her that she's got no strong foundations. She's got no core muscles, all of these things that are really critical to
just some nice feedback there.
Yeah. I love that. It's clear. It's not unkind, it's just clear.
Okay.
And so, just how powerful that has been in terms of the sort of similarities within like leadership and, the necessity to have really strong foundations in a team.
Sure.
So they're sort of exploring all of the paradox of leadership and living and, the human experience.
So it sounds like you're still making your way through it.
I am. I'm very early stages.
Okay.
Yeah.
All right. Well, I look forward to...
I'll report back.
I look forward to you bringing back kind of maybe a review on... Are my foundations strong? I look forward to that feedback as such, the assessment. These are happening too fast now, so I don't necessarily have anything reading, listening to, or watching that I've finished. I was going to do a shout out for gardening season's back, and so it's spring and Labour weekend is the key time to get everything back into the ground. I've been sowing new grass seed. I can see all the flowers coming out. So I just want to prepare listeners that there will be regular garden updates forthcoming over summer. So as avid listeners would know, I'm an avid gardener. So that was just a shout out there. Ngaire, thanks again for coming in. A pleasure as always. So eloquent. And I always learn something when I'm talking to you. I think they've got a wonderful approach to kind of holistic wealth management, and you're doing a great job. So I thank you again for coming in. Did you enjoy yourself?
I did. Thank you so much, Nigel. This is getting less stressful the more that I come and hang out with you. So I appreciate you, and I appreciate your very kind words. Thank you so much.
You're natural. And just an important last message to everyone before we wrap up. So again, today's chat is all about education and ideas. It's not personal financial advice to you or your circumstances. And then with that, everyone's situation is obviously different. So it's always worth talking to a financial advisor, or they could be a digital advisor as such, some of the tools that are available out there, before you make any major changes. Things to consider, but it always pays to talk to a professional, and there's lots of people at ASB who can help with that. So until next time, happy mortgage reviewing or investing, wherever you are on the continuum there, and it's bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.